they started out the year by saying there'll be 4 rate cuts, and then 2, and then maybe 1, and then maybe even raise rates. But now there might be 1 rate cut. Anything that comes out of the Bureau of Labor, or excuse me, anything comes out of the Fed has been a lie. Go all the way back to Bernanke when he told us the subprime crisis was contained, and then poof, it blows up. Everything they've told us about inflation, first there was none, and then it was transitory, and then it was structural, but then it was under control. And I mean, everything they have told us has not been true, nor has their policies that have been reactionary at best done anything to fix it. I mean, look, I can't imagine that they ultimately have any desire to lower rates. Quite to the contrary, they should have continued to raise rates, to normalize things, and to get things under control. And in fact, they haven't. What they did is they raised them 500 basis points in a very short period of time, putting distress in the marketplace. But this is a situation where the suppression of interest rates for all of these years and the easy money that they threw on top of it has created massive distortions in asset prices and put them in a very tough position. If they lower rates, they have signaled to the world, again, that they will never get their balance sheet in order. They will never normalize it. They will always choose inflation over austerity, simply because they know that if rates get much above 5% on the 10-year Treasury, it blows everything up. So you raise rates, you blow things up. You lower rates, ultimately that leads to higher inflation and higher rates, as the rest of the world who is buying our treasuries has to make a decision. Do you want to continue to own the debt of a country that has signaled that they can't get their balance sheet in order, that they will continue to lower rates and be accommodative, which will only lead to more inflation, which will only lead to devaluation of the dollar, and not to mention a country that has chosen to weaponize the treasury market. This is not good, and I think Powell is damned if he does and damned if he doesn't. What else is he going to say? And everything he has said hasn't come to fruition. In fact, they've had to back away from the things that they've said and say, well, now maybe we'll do 1 rate cut. Who knows? There was going to be 4 for sure. And you even get some of the Fed governors, like the Fed governor from Minnesota says we should be raising rates. So I guess we'll see how it all plays out. I wouldn't put much stock at all in anything that comes out of Fed Chairman Powell's mouth. He's trapped, and he's trying the best he can to posture. Absolutely.
In recent comments, Andy Schectman highlights the Federal Reserve's erratic interest rate policies, which he argues are destabilizing the US economy. Starting the year predicting 4 rate cuts, the Fed now hints at possible rate hikes, echoing past missteps like Bernanke's misjudgment of the subprime crisis. This inconsistency has fueled inflation and asset price distortions. Schectman points out that while the Fed struggles, BRICS nations are gaining strength, trading in local currencies and stockpiling gold, signaling a shift away from the US dollar. With 59 nations planning to join BRICS, the global economic landscape is poised for significant change. By trading oil, corn, and soybeans in currencies like the yuan and ruble and converting reserves into gold instead of US treasuries, these countries are chipping away at the dollar's dominance. Schectman argues that the Fed's inability to stabilize interest rates and control inflation is playing right into the hands of BRICS, which could soon introduce a gold-backed settlement currency. This methodical and strategic approach by BRICS could reshape global trade and finance.
If you take a look at what has been happening since last August, when the last BRICS meeting happened in Johannesburg, was that the deal was that they would make trades in local currencies. All of these countries would trade with one another in their local currencies, meaning, Russia is trading with India and it's back and forth between rupee and ruble. Saudi Arabia is selling their oil to China for a yuan. Let's back up a minute. The Russian finance minister, Sergei Glaziev, for the last 3 years has told us that they will issue a common settlement currency, and it will be backed by a basket of commodities and a basket of local currencies. We assume gold will be the primary commodity in this basket, as the BIS, the Bank of International Settlements, reclassified it, as we said last week, as only other tier 1 reserve asset, which is a big deal because for 70 plus years it was just dollars and treasuries, and now the most powerful bank in the world levies gold to a tier 1 status. And this to me explains why the central banks are buying it at levels the world has never seen. But what these countries have been instructed to do until the common settlement currency materializes, and this common settlement currency, they have to have enough mass of countries that want to be part of the new BRICS group. And right now we have found out in the last meeting that 59 nations plan on joining the BRICS, right? You're talking the majority of human population. And when that happens, things will change. But until then, what they are doing is trading in local currencies. As an example, Brazil and Saudi Arabia. Brazil is trading with Russia, with Saudi Arabia, with China. They are using, for example, with China right now, they are selling their corn and their soybeans for yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. So they're not settling in dollars, first and foremost. And the settling in yuan or in real or in rupee or in ruble, any of these currencies, chips away at the settlement status of the dollar. But what they are also doing at the same time, you see, part of the petrodollar deal, and most of these countries have done something similar, even outside of oil, as it pertains to all of their excess reserves, was that you would sell in dollars and then take the excess reserves and put them in U.S. treasuries. Well, these countries, as we have said, have been selling treasuries and replacing it with what? Gold, which is the only other tier 1 reserve asset next to treasuries. So that chips away at the settlement status, or the reserve status of the dollar, rather, the settlement status in the trade, the reserve status in the excess going into gold instead of treasuries. And so what you see happening, in essence, is the settlement status of the dollar beginning to be chipped away as all of these countries are now settling in local currencies. But instead of putting the excess into U.S. treasuries, it's going into gold, which is keeping the price of gold high and moving higher and keeping interest rates higher in the U.S. Treasury market, as all of these countries which used to buy our treasuries, which would lower rates and strengthen the bond market, are in fact selling treasuries and replacing it with gold. And so as it is right now, there are 10 countries in the BRICS group. And in order for it to be a situation where you have mass usage, where it would really start to blow up the US dollar and have it pegged to gold, which ultimately I think it will be pegged to gold. There's no other reason that the most powerful bank in the world, the BIS, would have reclassified gold as the world's only other tier 1 reserve asset. And no other reason why the central banks would be buying it at the levels that they have been. But I think what is going to happen with the BRICS currency, to me, more logically, would be that these countries will all have this multipolar world where they strengthen their own local economies and local currencies. But if you have, as I mentioned, 59 nations in BRICS instead of 10, well, if you have a BRICS settlement currency or a common currency that has gold tied to it, and these countries have been buying gold like it's going out of style, you don't have to have it immediately pegged to gold right now and trying to disrupt things. But when you have 59 countries and you maintain your own local economies, but the settlement currency is backed by gold, you can now settle in the new BRICS currency and go shopping in 59 different countries. Maybe you want to buy, machine parts from one country and oil from another country and wheat from this country, and use the BRICS common currency, which will be, I believe, pegged to gold to some degree, and blockchain technology, the two combined. But in the meantime, until that's fortified, and you have to have enough countries in place in order to do that, because if you only have 10 countries to choose from, to trade from, you're limited in what you can do. And you may not want to hold rupee. You may not want to hold ruble. Maybe you do, maybe you don't. But if you have a common settlement currency, you can trade with all of these countries, especially if it's gold backed. It gives it even greater strength. But until then, look at what China is doing. They sell their oil, or Saudi Arabia rather, they sell their oil to China for yuan, the digital yuan, which is immediately convertible into gold in the Shanghai Gold Exchange. So they're immediately settling in yuan and then putting the excess reserves, any excess reserves, into gold which is a tier one asset. You chip away at the reserve status, you chip away at the settlement status. So ultimately, yes, gold will be tied to a new system. But by pegging you could argue in some respects, these currencies are already kind of hedging towards a gold pegging with the way the system is set up. But to actually peg it to gold and try and be a reserve currency or a global settlement currency is foolhardy. But it isn't if you have 59 countries together in a new currency that is pegged to gold using distributed ledger technology. And in the meantime, you strengthen these unions, you strengthen the economies, you weaken the dollar, you weaken the treasury by trading in local currencies and putting excess reserves into gold instead of treasuries. So ultimately, you will see a gold backing of a settlement currency, but I think it'll be a BRICS settlement currency, but not until the cross section of humanity is large enough. And you put all of these countries together that have formally and informally applied, along with the Belt Road Initiative, which we talked about last week, and the Eurasian Economic Union and the Shanghai Cooperation Organization, which I've been saying for 3 years will join the BRICS. And the president of Belarus has just called for a formal summit to bring these countries into the BRICS fold. You're talking 85% of human population, and the majority of all the rare earth metals, the majority of all the commodities from precious metals to wheat and soybeans. You're talking something that should not be underestimated. But what I respect about these countries in this union is how methodical and regimented they are in building what will be a force to be reckoned with, and not firing that bullet before it's time to do so. So ultimately, Alistair is right, but I think it has even greater significance if done in a unified currency rather than one like the yuan or one like the ruble, who may not have the global appeal the way that a mass united common currency would, in that being in the BRICS.
Thanks for watching. Let's recap the key points from today's discussion. Andy Schectman criticized the Federal Reserve's inconsistent rate policies, which he believes are destabilizing the US economy and fueling inflation. He highlighted the BRICS nations' strategy of trading in local currencies and stockpiling gold, signaling a shift away from the US dollar. With 59 countries planning to join BRICS, this coalition could introduce a gold-backed settlement currency, significantly altering the global economic landscape. Schectman argues that the Fed's actions are inadvertently empowering BRICS, setting the stage for a major shift in global finance. If you found this video insightful, please like, share, and subscribe for more updates. We'd love to hear your thoughts, so drop a comment below and let us know what you think about the future of the US economy and the rise of BRICS.